Hello, savvy investors. Welcome back to the Dividend Uncle channel. In today's episode, we're taking a deep dive into the performance of my REITs portfolio for the first quarter of 2024. From overall total returns to the dollar amount of dividends received, we'll cover it all. Plus, I will spotlight the top performers in my portfolio, and believe me, they're a surprise. Stay tuned as we compare our strategy against the CSOP iEdge S-REITs Leaders ETF, highlighting the unique advantages of our approach. Before we dive in, do me a quick favor by hitting that like button and subscribing to the Dividend Uncle channel. Your support really motivates me to keep bringing you these insightful videos. Plus, you'll get updates on the latest analyses and tips that could help shape your investment strategy. Okay, grab your notepad, and let's get into the numbers. Q1 2024 Portfolio Performance Overview. Let's start with a candid look at the overall performance of my REITs portfolio in the first quarter of 2024. It's been a challenging period for REIT markets globally, and my portfolio felt the impact, posting a negative total return of -6.4%. A pivotal factor behind this downturn has been the shifting investor expectations around the pace and scale of interest rate cuts by the U.S. Federal Reserve. Some analysts reported that the market was expecting as much as 6 interest rate cuts by the U.S. Fed in 2024, but has now been reduced to 2 or 3 cuts. Such changes in expectations have a profound impact on REIT valuations, as the cost of capital and investment yields are closely tied to interest rate movements. While these results are a departure from our desired outcomes, they underscore the cyclical nature of real estate investments, especially since REITs are highly leveraged. It's a reminder of the importance of remaining adaptable and ensuring our portfolios are well diversified. Dividends received, a credible quarter. Turning the focus to dividends, the heart and soul of REIT investing, we've received a substantial amount this quarter. The total dollar amount of dividends hit the mark of $8,856, underlining the income-generating power of our portfolio. Among these, the top contributors were CapitaLand China Trust, ARA U.S. Hospitality Trust, and CapitaLand Asset Trust. While CapitaLand China Trust and ARA U.S. Hospitality Trust share prices have not performed well recently, the lower prices translate into higher dividend yields, and I took the opportunity to accumulate, leading to an outperformance in dividends contribution. It is important to note that their robust distributions are a testament to the operational strength and income-generating abilities, even as their share prices showed some weaknesses. Spotlight on top performers. As we navigate through the fluctuations of the market, it's crucial to recognize the bright spots in our investment journey. This quarter, despite the overall portfolio's dip, 3 REITs have stood out for their resilience and strong performance. Here's a breakdown of the top 3 performers in terms of total returns. 1. Topping our list is Cromwell European REIT, with an impressive total return of 21.0%. Known for its strategic acquisitions into the more resilient property sectors, and effective property management to keep its expenses under control, this REIT has demonstrated remarkable resilience in a challenging economic climate, and is the runaway outperformed in my portfolio. 2. Coming in a far second, ARA U.S. Hospitality Trust achieved a total return of 1.8%. This REIT is capitalized on the recovery in domestic travel in the U.S., with net property income jumping 15% and distribution per unit increasing by 12.3% in 2023. ARA U.S. Hospitality Trust is also one of my top 3 dividends contributor this quarter. 3. Rounding out our top 3, Far East Hospitality Trust posted a slight negative total return of -0.5%. Its success can be attributed to the return of the Chinese tourists in Singapore, and the magnetic draw of Taylor Swift in Q1 2024. These standout REITs not only highlight the potential for selective growth within the sector but also reinforce the importance of our core satellite investment strategy, aimed at balancing steady income with opportunities for appreciation. Beating the benchmark face-off. Now, let's compare the REIT portfolio's performance with the CSOP iEdge S-REITs Leaders ETF, which primarily weights based on market cap. The CSOP iEdge S-REITs Leaders ETF's total return is -7.4%. Hence, the REIT's portfolio had a 1% point outperformance at -6.4% return. Moving on the dividends, the yield for the CSOP iEdge S-REITs Leaders ETF is 5.9% based on the price as of January 1, 2024, while the dividend yield for my REITs portfolio is higher at 6.5%. The outperformance in both price change and dividend yield illustrates the strategic depth of our portfolio. By employing a core satellite strategy, we've not only achieved a higher total returns and higher overall dividend yield due to our exposure into higher yielding opportunities. This deliberate choice of quality satellite REITs over the ETF's broader market approach underscores the benefits of more active management in maximizing returns. Thank you for joining me for this in-depth review of my REITs portfolio's performance in 1Q 2024. I hope this episode has shed light on the importance of strategic portfolio management and the potential of REITs as a cornerstone of your investment strategy. Remember, understanding your investments inside and out is key to navigating the markets confidently. If you've found this analysis helpful, please like, subscribe, and share your thoughts in the comments below. Your support fuels this channel, and together, we can continue to make informed, savvy investment decisions. Until next time, happy investing.